Are you ready?
Ready.
All right, let's go. Kevin here, top 100 financial advisor and best-selling author. We are here to talk about the stock market. REITs, real estate investment trust, one of the best ways to invest and one of the best things to add to your portfolio. Except not every REIT is the same. And in 2023, with interest rates, a potential recession, the high price of eggs, and all these things, we need to talk about what REITs make sense for 2023. And the list is short. I'm going to just tell you now, the list is extremely short because I went back, did some research. I even went back to the video that we did last year on the top REITs for 2022. And it ain't but one REIT that I trust this year. So in this video, we need to talk about what is that REIT, as well as what are REITs, how can you get them, what are the benefits, so on and so forth. Okay, so REITs, again, stands for Real Estate Investment Trust. The best thing about REITs is it allows you, the investor, to invest in real estate just like you would a stock. They usually pay out amazing dividends compared to like regular stocks that are out there, and they tend to be one of the better places to invest when the economy is a little bit shaky and when interest rates go up. And again, when the economy is down, these REITs are usually pretty solid because you are normally getting a solid dividend, if nothing else. Now, not every REIT is the same because some REITs specialize in logistics. For example, PLD, Prologis, which was a REIT that I did invest in, not investing in anymore. I let go of that one because things did not go well. They invest in, or they own rather, warehouses. So Amazon would rent out or lease those warehouses and ship all those things across the globe. Well, why would that not work in 2023 and why did it not work in 2022? Guess what? Amazon let go of more than 10,000 people. The demand that worked in 2020 and 2021 has fallen off. They don't need those warehouses the way they did before. Therefore, that REIT is not as valuable as what it used to. Could it be valuable in the future? Sure. But that is the problem and the difficulty when it comes to REITs. So, the one REIT that I trust, okay, there are lots of REITs out there. I'm not saying it's the only REIT in the world, but Iron Mountain. We talked about it last year, and since then, it's up 26%. Okay, the market as a whole was down 20%. Iron Mountain by itself was up 26%, and then just the last 6 months it was up about 12%. Now I will say that most of the REITs, the other REITs I did look at, and I'll just give you a quick list here: Prologis, Mid America Apartment, that's MAA, the ticker symbol O. I forget the name of that one, but just type in the letter O, and that one will come up. The name will probably come up before I end the video. AMT and Plymouth. AMT is American Tower REIT, one of my favorites, but again, it didn't do all that well. And Plymouth is PLYM. They're an industrial REIT, and they're kind of out there. All of those are okay, but I will say in October, I would say October to now, most of these REITs have taken an upswing. So I will say that it seems that the REIT market as a whole has started to rebound. Like it looks like, if you look at all those charts, they really look familiar. And actually, I'll just show you a few here as you kind of scroll through. It's like, oh look, they all kind of just bottomed out and started to take off in about October or so, which is generally normal. I've already said, or I've said many times, from October to April. Is it October to April? I forget the exact stat, but anyway, the second half of the year, October through about June or so, is usually one of the best times to invest because the market just tends to rebound, and that tends to be the case, but especially so for REITs. Aside from all that though, the only reason, or the real reason why I have to stick with Iron Mountain is because it is the only one that has proven, well really two reasons, but it's the only one that's proven to have worked in 2022. And the way that I see it is just like, physics is, something that stays in motion is going to stay in that motion until something else impacts it. And I don't really see any outside factors to date that is going to stop the environment or the trajectory of the stock market. It's still going in a very similar fashion so far in 2023, the same way it did last year. The Fed is still raising interest rates. We still don't know if we're in a recession. There's still a war in Russia and Ukraine. Eggs are expensive. Gas prices are up and down. It doesn't look like anything has changed. Therefore, I will have to stick with Iron Mountain until otherwise. Until something happens to say, hey, look, I think we need to change our outlook on the economy and the stock market. I really have to stick with Iron Mountain until then. Tech still isn't working, right? So far. Earnings haven't been all that great so far, depending on where you're looking at. And again, a lot of these tech companies are cutting. So that's number one as to why I need to stick with Iron Mountain. The other reason why I need to stick with Iron Mountain is the fact that they are in the data management business. I don't know about you, but everybody is still collecting data. Now, unfortunately, Microsoft and Amazon and Google may be letting go of people. They're not letting go of data. And as long as that is still a thing, I think Iron Mountain is one of the few places where demand is going to stay consistent. Prologis, the one I was talking about, yeah, logistics can change, right? I didn't think it was going to change, but that is something that can change. Amazon can cut down. We're not ordering as much as what we used to. That makes sense, right? Mid-America Apartments, my thought was, and I think we can all sit here and say this, is that I didn't think the demand for apartments were going to go down, and I don't think it necessarily has, but that for whatever reason, that didn't work, right? And we are going to get that infrastructure bill. Not necessarily, that doesn't necessarily mean that, you know, all that money was going to housing and things of that nature, but that is something that could shift both this year and in the next few years. So I'm not entirely sure that I can put a whole bunch of confidence in any of those other REITs that I mentioned. The other thing too is, just because I don't have any other REITs out here doesn't mean that there's not a REIT that's not doing well, okay, or that it won't do well. I'm just really looking at which one of these can I trust? Which one of these can I put my money into? And more importantly, which one of these can I put my kids' money into and be okay with? And right now, based on what we have seen, Iron Mountain is the one I say, hey, look, son, daughter, I will invest $500 for your college education right now in Iron Mountain, and I will come back and look at it in December. That is the only one that I can trust. Now, I have American Tower REIT, but the only reason I'm keeping that one is because I have had it for several years. And I think it's solid, and on paper, it should be good. And I think, if I'm not mistaken, I think it's up like 1.5% in the last like year or so, which is not great. But again, if I want to do a bit better than 1.5%, that's great in 2022 because market was down 20%. But again, if I'm looking for confidence and I'm looking for what I think will be security, Iron Mountain is the only one I can reliably come up with. Now, if you got some others in the comments that have worked, let me know, okay? I didn't say I scanned all 50 million REITs out there in the world, but I did start to look at some of the most popular ones, some of the most common ones, and which ones had the best track record. Iron Mountain was the one that I came up with. So let me know what you think. It was very interesting to go back and look at videos from last year. I do check myself to see whether we were right or wrong pretty often. And a lot of the comments said like, hey, Iron Mountain, I bought it, it made sense. Y'all are the real winners here because that was one of the few stocks in the real estate industry that did incredibly well, and I think that it should continue on that path. All right, so before we get out of here, I'm gonna ask you again, okay? Go ahead and hit the like and subscribe button. That's standard. That is your assignment, okay? But aside from that, let me know, do y'all want to do like more segmented or formatted days? Or every Monday we do a thing, maybe every Tuesday we do a list of something. This list was a stock of one, a REIT of one, you know, breakdown Fridays or whatever it is. Do y'all want like themed days, or y'all just want freestyle for whatever day? Let me know, because it helps me kind of organize the content and kind of get things out on time. It makes the data management for me a lot easier, because remember, I'm one person, okay? I make typos. So if you saw yesterday's video, and at one point I changed it now, but it said like socks to watch out for. But aside from that, it does make it a lot easier for me, because I do 250 videos, brand new videos every single year. So it's difficult to like come up with something new every single day. But if we have segmented days, it can help me organize and help like our whole process and things. I think I've gotten the lighting fixed in a way that I like, and hopefully y'all like it too. So let me know as we continue to grow the channel and make these little tweaks for 2023. All right, that is it for me. I will talk to y'all tomorrow.